Okay, folks, welcome back. This is our midweek review. It's Wednesday, October 30th. It's our daily chart of the daily dollar index. A little bit of a tongue twister there. All right, so we have our rate announcement from the Fed today. Quarter point reduction as it was forecasted, not by me, but analysts. They were expecting 1.25% would be the result, while we were at 2%. They were forecasting 1.25%, so a quarter point reduction, and they saw the 1/4 point reduction in the federal funds rate. Now, today, when we talk about Canadian dollar, just note that it's been sitting at 1.75. 1.75 was the forecast, and it was remained unchanged. So we dropped from 2% to 1.75 for the Fed. So these are actually on par in terms of interest rates. Okay, so when I get to Canadian dollar and the overzealous movement that we had today on that pair, I'll refer back to this. Just know that 1.75% is the same now for the dollar. All right, so let's go over to our charts again. So we didn't get the run up into this gap. I said I'd like to see that stay open. That would be a breakaway gap, and we did. For the initial look right here, it looks as if that may be in fact what we get, and we'll be looking for a continuation lower. They dropped the Fed rate, so there's really, in my opinion, there's really no desire to want to be in the dollar. It's too soft now. They're not raising interest rates. There's no interest in capitalizing on buying dollars. It's softening on the interest rate basis. And we have a sell side liquidity pool here and the double bottom sell side liquidity pool that we've been noting for a while now. So we spent a lot of time inside this SIBI, sell side imbalance, buy side inefficiency. Note the bodies of the candles stayed within that. We did get 4 wicks, and today it would be expected. And it's interesting to note that we did not come all the way up here to rebalance this price point. So pretty interesting to see that. And we had equal highs in here that they did purge on the news today. So we had an initial run up, and then it faded all of that. So we took buy side liquidity, didn't get into the fair value gap on the daily, which is those 2 horizontal lines. Then we ran the sell side liquidity and a deeper level of sell side liquidity and rebalanced to a bullish order block. We have another pool of liquidity resting below here, and then the equal lows here. So we're looking for 96.80 as our next downside objective for the dollar index. Euro dollar, after coming down and rebalancing here, we were looking for that. And then I said if we had some kind of a run into that daily fair value gap as noted on the dollar index, this could be our next area of imbalance to be refilled. And it didn't get down there. We've spent a lot of time inside the fair value gap, and we've rallied. Now our attention goes back to this high here. That's 111.78. So we're just going to basically call 111.80 our next upside objective. And then the buy side liquidity pool resting above these equal highs here. It comes in at 112.50, we'll call it. And then the triple highs here, too clean, looking for 112.85 on an intermediate term basis. So if we get that drop down into that daily sell side liquidity pool here, this movement here would translate in the same thing as this movement up to here. Okay, so it's always a little bit more pronounced on the foreign currency, whereas the dollar index, if it's reaching for an objective like this for cable and euro, it tends to get a little bit more extrapolated. This is certainly within reason as an next upside objective. But if it's going to go here, look how close we are to that. So it goes without saying this would be very easy to snatch up if it did it on one run. All right, so dropping into a 15-minute time frame for euro dollar. It's been pretty ugly, to be honest with you. Monday's trading, we had basically a lethargic rally higher. Monday into Tuesday, we had a buy side liquidity pool here. Price traded down. On Monday, I traded short. I took 2 entries in here. I wanted to try to capitalize on the likelihood of that daily fair value gap here. So I was selling short in here with the expectation we could get a run down here. So I took 2 limits in here to get short. 2 limit orders were placed in here. What I was trading off of was the return back to this fair value gap, because everything's going to act as a real support and resistance level. When a level has been rebalanced, it becomes a balanced price range. So that's essentially what I was trading short on, the fair value gap being retraded to. It had a little bit of heat on it. Let's see, the high was 111.06. My stop was 111.10. Okay, the heat on that trade was to a high of 111.06. My stop on it was 111.10. So I get really close to not knocking me out on both positions. One of the positions I took off here below the sell side liquidity pool, and the other here was stopped out at my stop loss, so it came up and tagged me on the second one. I didn't get the daily fair value gap that was lower here on euro, so it did take me out of that one. And then after price went below the sell side liquidity pool here, we rallied up, and once it did that, it broke a small little area of market structure. And when it came back down into rebalancing, I went long again, and I wanted to take first profit above the buy side liquidity pool here, and then the ultimate objective being hit on the limit at 111.10. Price consolidated going into today, Wednesday. We had a sell side liquidity pool resting below equal lows here. We rallied up above buy side liquidity here. I didn't want to add all these additional annotations because the chart's already busy as it is. But we rallied above it and then traded down below the sell side liquidity pool, and then left buy side liquidity here in the form of equal highs. Then we dropped down on FOMC, traded right back down into the fair value gap. This is a fair value gap low on the hourly, and that is here, which we talked about already. In here, fair value gap, and it extend that out in time, it becomes an area of real support and resistance. So the levels are 111.14 essentially, and then 110.85. So it came back down and retested that fair value gap low, wicked through a little bit as you would be expected on FOMC related news, and then rejected, sent it higher above the buy side liquidity pool, taking us back up into a challenge on the New York session high on October 24th. We have relative equal highs in here, so it looks like we'll probably see a run up into that 111.65 level. That'll be our next upside objective for this pair. And again, going back out to that daily chart, that would be the buy side liquidity pool, as I mentioned, for euro. Cable, not touched. I have not had any interest in this one. There's really nothing in here that I could draw any kind of parallel to, except for the fact that we look like we're going to probably make an attempt a run. The only thing I'm noting here with this horizontal line is the old high here. So 130.15 next upside, and then we have the buy side liquidity pool with these equal highs here, as mentioned before. Where to get in at, I wouldn't even begin to try to suggest anything with this one. It's Brexit. Now we have a delay. It's being postponed till the end of January. So it's a never-ending story with this topic, and it's going to have a heavy weight on GBP's performance and its clarity and its price action. So for now, just unless it becomes really obvious in something, I'm not touching GBP. My focus is on euro dollar, which brings us to dollar CAD. Dollar CAD As I mentioned earlier at the beginning of the video when I was showing the Forex Factory calendar, contrasting the interest rates that our country in the US has now 1.75%, which is equal to 1.75% on the Canadian interest rates. We've been studying this balanced price range, and I mentioned as we were going into it deeper in here that it's going to be very problematic to get through this on a one single pass through. It's been digging deeper, 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 deeper. Yesterday it went just a little bit lower, and then we had a rejection in here. Today, with the rate announcement, with the rates being left unchanged for the Canadian, this initial surge, to me, I'm just going to put it out there and tell you, I think this was all fluff. It rebalanced all of this. And because of the nature of the balanced price range in here, this is exactly why I tell you, don't look to trade balanced price ranges where it becomes a high resistance liquidity run, because it can do this type of event here and still erode all the way down later on, and much longer than you're willing to sit through to take out these lows. Okay, so again, we're at parity in terms of interest rates between Canadian and the dollar. So all of this initial run here, to me, I think was just a heavy stop run. Nobody wants to be short dollar CAD right now because of this big run. And you can already see what's happened intraday here on an hourly basis. You know, we ran up really hard, giving up a lot here from 132, what is that, 132.8, 132.07. And now we're back down in 131.60. Okay, so we've already given up 40 pips. All of this is really imbalanced, and I would look to see this erode. I don't want to see it do it too fast, because if it does it really fast, then it could be bullish, and that would be essentially wrong. But the study that we're doing here is very fruitful for you, because I don't want you to try to look for setups that would be like this. Remember, we didn't go into this observation to say, okay, we're going to be short dollar CAD. I wanted you to note the long-term effects on high resistance liquidity runs versus what we see in low resistance liquidity runs, where it's just really quick. It just slices through all of the levels and goes right for the liquidity. It has a heavy fortified range on that daily chart, dollar CAD does, and it's going to take a lot to get through it. And to me, I think this, if we get all of it given back over time and we make a run on that low from the daily chart, let's go back out to the daily. If we do get through this, I think this is, we're going to see this as a longer term intermediate term high. In other words, we could see this trade a whole lot lower over time. That's what I'm suggesting to you now. So the lack of interest rate increase, the lack of a reduction in interest rates for the Canadian dollar, just makes it really, it's not appealing for investors to pour into, but it's not something that should be shorted either. So if that's the case, again, thinking back to this currency pair here, dollar CAD, the dollar is the first in the pair. So all of this showed the initial strength between 2% versus the 1.75% in Canadian. So until the rate announcement came out for the Fed, US had a slight 0.25% advantage, and this was being fluffed up in that number. So I think all of this run here fits into the narrative I was outlining here, where this is a high resistance liquidity run. This is what you'd have to endure, and this is typical of doing a high resistance liquidity run, where if you went short in here, say you shorted it here and you had some open profits, maybe you took something along the way in partials, this right here would have cleaned your clock, and that would be it. You wouldn't be in the position anymore. You'd be gone. No matter what you used, where you got in at, you would be out, and you would not be short dollar CAD. So we want to watch this now going forward. I'm not suggesting that we shorted in here. Maybe there will be something in here that we could work with in terms of a study. But again, it's high resistance in nature, so we are not actively trying to pursue a short. We're studying how this long erosion into this balanced price range. Again, think about it. We ran up in here. If we get back down inside this range, it may come back quickly into rebalancing here, and then start to work its way lower, and then we return back to studying how much time it takes to get from the top of this range to the bottom where the sell side liquidity pool rests below here. Longs feel really secure. Anyone that has been holding longs over here, they feel fortified. They feel vindicated that they saw this big rally up in here. Even this give back a little bit feels natural to them. We'll see what that does if we get back inside of the range here, and then if it starts to erode again, that becomes a longer term bearish stance for dollar CAD and long in terms of a long-term, intermediate term look for Canadian futures. Okay, because Canadian futures would be going up in this regard if we drop, whereas this rally here would show Canadian dollar futures contracts declining because it's inverted. All right, so I just want to make the distinction here because I know a few of you in here like to be highly critical about certain things. We never said we were short. We're not shorting in here. We're contrasting the nature between this high and this low, how this is a balanced price range, and differentiating that between the nature of a low resistance liquidity run where we wouldn't necessarily expect or probably ever see this type of event here with a low resistance liquidity run framework. Okay, so it's not much to go on. I know this is a typical week that we are very, very cautious, and typically the first week of the month. I'm already pre-warning you that the analysis is probably going to be lukewarm until we get through non-farm payroll. And then usually we open up with a little bit more clarity. Imbalances are obvious, then we can start working with the remainder of the monthly range. This week has been exactly as I warn you. Typically, it's very hard. I'm going to be real honest with you. It's hard. If you look at the euro dollar where we're at now, this isn't an easy market to trade. I could say very easily that this is a fair value gap and return back to it. And while I watched it trade down there, I didn't have the guts to get in there, not even in a demo. I just didn't want to be in it. I just didn't trust it. Didn't trade at the level I really wanted to see. I felt if we were going to rally as hard as we were on the dollar, I was waiting for it to get up in here. Had it done that, then I would have went long on euro dollar, not cable, not anything else, but I would have went long on euro dollar if we traded right into this fair value gap. But it looks so far looks pretty good. We had a nice level of distribution. I remember in the commentary on the weekend, I stated that I wanted to see this open fair value gap stay open, and that would be a breakaway gap, so we could see a potential longer term erosion on the dollar. And right now we have the fundamental backdrop with the interest rates declining. It goes without saying that this would be a really natural area to run to for liquidity, rebalance this BISI in here, and then make a run for the relative equal lows here for sell-side liquidity by the end of the year. That's what I'm expecting. That's what I'm anticipating. What we get is what we get. And all we're doing here is forecasting and then studying the price action between. If there's an opportunity to frame a setup along those guidelines, then obviously we can do that. All right, so let's take a look at the setup I did in here. I recorded the entries and the management, but I just time reduced it to me actually executing the entry and then me executing the partial here, and then as it hit the limit order. It would be very little commentary, but I just wanted to give you something to go with for this week as a trade example. All right, so you're going to see me open up a long in here. So I'm creating a new order, and price has ran below the sell side liquidity pool, and my previous order hit limit. There we get that out of the way. And I'm going to set the target to 111.10. So above these equal highs, reaching up a little bit deeper and into that fair value gap, as mentioned in our commentary for the euro dollar. And I apologize, that's Bella trip trapping across the floor. Alright, so here I am, I'm long in here, and I'll be looking for a run above these equal highs to take my first partial, because it might just get to that price point there and give up the ghost and not go any higher. And I'm annotating where the fair value gap is that I'm framing this setup on. Now, I did not trade into the fair value gap. I was trading in close proximity to the fair value gap. So you can see the fair value gap was down here. You can find that on your 5-minute chart on the 29th of October. And plus the spread and you can see that there's where the entry is. I didn't take a whole lot of heat at all on that trade. I think it was maybe 2 pips at all drawdown later on in the holding of it. And it isn't going to be a whole lot of time before it transitions, but why I went long, because you're probably asking, well, why did I go long? I got a couple emails from folks that were asking, what happens if I have a trade idea that doesn't pan out? Even though this were in profit for demo, the idea was nullified. So because we had a break in market structure, we weren't able to get below this low here, and it was such a deep retracement. I went long on the basis of this is a bullish breaker, and we had a fair value gap in here. So if price could rally above these equal highs, as we'll see in a moment, price did run above the equal highs, and here I am. I'm taking my first partial off. The take profit on the 111.10 has yet to fulfill, so I've taken half the position off, or 2/3 of the position off rather, and then we'll watch and see as price makes an attempt to rally up. I'll show the time in the lower right hand corner for my system, so you can see the local time as it happens. So the price is starting to rally. We're above the old high on the 28th. So again, I'm waiting for that 111.10 level to get hit on the limit, and boom, there it is. Okay, so as time happened, everything's there, so you can see on the time and sales for MT4, everything happened as you would expect to see. And I'm going to annotate exactly where that fair value gap is on the hourly chart, right in here, and that's what I was aiming for. So I hope you enjoyed that.